The past 24 hours have been quite an eventful few in the world of crypto and DeFi. Today we're going to take a look at whether Bitcoin's about to enter a multi-year bear market, if the war on DeFi is about to continue, and where the markets are headed. Hey guys, Sheldon Evans here, welcome back, or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications. As well as if you find any of the content in this video useful, please give it a thumbs up too. Now, we have a tweet on my display from Larry0x, who has conveniently summarized what has happened in the past 24 hours in the world of DeFi. Daniele, the founder of Abracadabra and a few other projects in the space, obviously liquidated 8 figures in cash. Sifu, who is his co-worker, was revealed to be a serial scammer and convicted felon, which Daniele knew about. We'll talk about this in a second as well. Alameda dumping $500 million at a loss. Biden about to regulate crypto, and the SEC introducing new destructive rules. But before we get into these individual news articles, let's take a look at what is going on in the market and across the board. Bitcoin, Ethereum still down on the weekly. Cardano about 18%, XRP 20% almost, Solana 30%, and Terra almost 40% down on the weekly, which is of course due to a lot of the news that I've just spoken about as well. Now let's take a look at what's going on in the charts to try and figure out where the market is headed. Bitcoin, of course, still holding just above that $35,000 level, a level that I've been outlining on this channel since the beginning of last year. Now, many of the levels on this chart and the whole chart and a few that I'm about to show you have not changed over the past few months on this channel. And I've said that a few times that if you have a plan, trade that plan and stick to it. If it goes against you, at least you knew that you had a plan. Now, these levels are levels that I've been outlining for many, many months on this channel, and it turns out that they are holding support for now. Now, of course, if we zoom out, it simply looks as though Bitcoin has a double top, except we do have a higher high and at this point a higher low, meaning that the overall market uptrend on a yearly basis is still up and to the right. If we do form a lower low here, then it's likely that we will enter at least an extended or midterm bear market or bear trend, whatever you like to call it. But I've said that overall in the new macro environment and Bitcoin becoming more of a macro asset, I think we will have many more of these shorter term bear and bull trends rather than an overall multi-year bear market. So if we do enter some sort of a bear trend, I believe that it will last at least 3 to 6 months before we then start recovering and having major upside again, making new eventual all-time highs for Bitcoin and Ethereum and many other altcoins as well. But let's take a look at what is going on here. If we zoom out, you can see that essentially we've been trading range bound for about a year. If we measure it out back from where we first entered back in January 2021, about 389 days, you can see that we've simply been range bound between around $30,000 and $68,000. Now, by still being in this range and still forming a new higher low, I think there is potential for a potential recovery with having the RSI reset. And once the RSI does reset and recover, it's more likely that we have further upside ahead. The same thing is happening for Ethereum. You would have remembered from a few videos back, I did outline that once we broke that multi-month uptrend that started at the beginning of January last year, it's likely that we would see a downside movement, which we exactly did, and we bounced up and turned that into resistance before making a move back down. But we're entering this yellow range again that I highlighted back here during May last year when we were in that sort of initial bear trend or initial reversal of the markets, and I said that we were in that range, to which we broke out of the range and now have finally re-entered it. We are still stuck mid-range and are forming a higher low, so the bear or the bull trend is still currently intact and the market structure is intact. Until we break below this, there's no confirmation of further downside. Now let's talk about what's going on with Luna. Luna is one of those coins, of course, that is a favorite of the channel and a project that I truly do believe in. And you can see that we are having some significant downside. And this is, of course, due to a lot of what is going on in the world of Abracadabra, UST, and Anchor Protocol, as well as Magic Internet Money, which I mentioned in a recent video in my passive income video. But before we get into exactly what is causing this downtrend, I just want to update you guys that my project, Your Mom's House, or YMH NFT, officially launched successfully. We are now sitting at almost a 2 ETH floor and currently is up about 100%. Right after launch, our floor price shot up to 2.5 Ethereum, and we've got major announcements already. Of course, we're going to be raffling off a mutant ape very, very soon. We've got 3 of these that we will be giving to our holders. A bunch of other giveaways, and on the first day of our partnerships, we announced multiple partnerships and whitelist opportunities. We've got Hype Bear Club, we've got Monster Ape Club, we've got Imaginary Ones, and we've got Karafuru NFT. Major projects in the space, huge hype around them. Hype Bears, we managed to squeeze out the last few whitelist spots from the founder, and we're giving them away to our YMH NFT holders. Ideally, over time, all of our holders will have an opportunity to participate in at least one of these whitelist opportunities. Hopefully more. The longer you hold your NFT, of course, the more opportunities you you have and the more opportunity you have to make some money and increase that NFT portfolio of yours. But so far, so good. We do have some major partnerships lined up as well. The community is wonderful. If you haven't yet, go ahead and join our Discord. We have a ton of cool stuff going on there. The announcements launch there first, and you have to be in the Discord in order to participate in these events and in these whitelist opportunities and the giveaways and so on. So we've got a lot to give away. We've got a lot coming up, and I'm really excited for the future of this project. And I appreciate everyone who has already joined the community and is communicating very, very nicely within our living room and in the basement and the crypto magic rooms. We've got tons of stuff going on there. We also do have one of the lowest listing counts, meaning that people aren't looking to exit our community just yet. At least 90 items out of around 2,700, so about 3.5% of the listings currently active, which is great. Over 1,000 ETH volume traded just in our first week. So overall, very, very happy with our project, and I'm excited, and I appreciate everyone who has already joined in. Now let's get it back into what is going on with the Luna and the UST ecosystem. So Daniele, the founder, of course, of Abracadabra Money, says that today allegations about our team member 0x Sifu will circulate. I want everyone to know that I was aware of this and decided that the past of an individual doesn't determine their future. I choose to value the time spent together without knowing his past more than anything. Now, essentially what had happened is that his co-founder 0x Sifu turned out to be a convicted felon that Daniele knew about, and this has sort of compromised or lost the trust in many of the protocols that Daniele has developed. This is because the convicted felon was handling users' funds directly and he had access to the keys without disclosing that he was a felon to basically Daniele, except that he knew, and the public. So there's a lot of sort of trust issues going on here, and what is happening is huge companies like Alameda are liquidating a lot of their Magic Internet Money positions, and many people are also doing this, and this is causing UST and Magic Internet Money to depeg slightly. UST hasn't really depegged at all, so there isn't really much of a risk just yet there. However, Magic Internet Money is depegged by about 2% at this point, since people are unwrapping their strategy, which I mentioned in a recent video, the passive income strategy video, within the DGen box on abracadabra.money. So there is people who are looking to reduce their risk and reduce those Magic Internet Money positions in order to perhaps protect themselves, because they don't actually know what is going on behind the scenes. Now, I personally don't think that this is a major issue just yet. We do, of course, see a lot of de-risking happening, and this is very, very important because people do have to de-risk their funds, especially if there is some sort of controversy surrounding the protocols and the projects that they're invested in. So as a precautionary measure, a lot of people are doing this, but it doesn't necessarily mean that it's the end of any of these protocols. There's also some sort of risk around Anchor Protocol and the yield reserve on that, because people, of course, are liquidating their positions and withdrawing their collateral, which causes, of course, a lower collateralized value for the UST stablecoin. So let's talk about what is going on behind UST and the stablecoin and why this could be a potential risk. So Anchor Protocol, the yield reserve is decreasing rapidly from around almost $80 million to around $30 million recently, and this is due to the increased borrowing, increased borrowing, and no increased lending on the lending side. And this is also due to the current market conditions. When the market conditions are pumping, when the market's pumping, of course, more people are participating in DeFi and they want to borrow more to play around with that money in other protocols. However, when the market is in a bit of a decline like we are right now, of course, the people are looking to de-risk as well and move their money into other options and other opportunities. So the lending side of things decreases. However, people are still looking to earn yield on their funds, so they're depositing into Anchor Protocol, and that yield reserve will eventually deplete. But we have to be aware that Terraform Labs has vowed to refill that reserve if things do get ugly. So we can see that we have over $8 billion of UST still currently locked in Anchor Protocol, which is massive if we actually take a look at it and see how much demand there is for UST. We'll see a tweet from a few days ago from Jose saying that this is not what a bank run looks like. This is the demand for UST. You can see that it's up and to the right. People are still very, very interested in UST. They're actively looking for it. It's being listed on more exchanges. People want access to decentralized, algorithmically backed stablecoins, and that is exactly what Terra UST is. So over time, even though we are currently having a correction in Luna, it does form sort of the basis and the volatility absorber for UST. So I'm personally not worried in the short term. I do think this could be potentially a very, very good buying opportunity, since many people are scared, are risky, as we've mentioned many times. When there's a lot of fear in the markets, that it's the best time to buy, and that is essentially what's happening here. Of course, there is increased risk as well. You have to be aware of that when situations like this happen. We have to be aware of all of the risk that is accrued on your side if you are looking to capitalize on these opportunities, but usually those who take the most risk often are rewarded with the most reward. But we are still seeing, like I've said, a lot of demand for UST. We can see that the new UST listing on Huobi and Binance showed a strong performance of Luna. This meant that the gap between lending and borrowing increased and yield reserve started to drop. So for all the UST adoption, we currently need more borrowers to reduce that gap. Borrowing is often a good market signal. When borrowing is up, the market is usually as well. UST deposits, however, are constantly rising due to the exponential growth of UST and that sweet 20% yield. I've said this a few times, you can get around 20%. Now it's over 20% yield if you do deposit your UST into Anchor. So a lot of people are obviously looking for that, especially when the rest of the market is somewhat red and somewhat unopportunistic. We are looking for other opportunities, and that is what is increasing that demand for the yield. So if we take a look here, you can also see that Anchor is doing a great job of helping people to financial freedom and assisting with the growth of Terra and UST. Rates will come down in the future to be self-sufficient, but for now 20% will remain, and UST injection from Stablecoin will be used as a marketing incentive. Now, Stablecoin, the founder of Terraform Labs and essentially Terra, obviously has a lot of reserve to deposit into Anchor protocol because it is one of the best marketing tools for the Terra and for the Luna ecosystem. Earning 20% yield is almost unheard of in traditional finance. It is unheard of in traditional finance, and in crypto, a stable 20% yield on stablecoins is very, very high, if not the highest that you can earn on stablecoins somewhat safely. So it is a huge opportunity that I don't think Stablecoin, who is DoQuan, will let slide. So that is essentially what is going on around with the Terra ecosystem right now. And of course, this filters over to Luna, since UST is also backed by Luna. And in order to borrow magic internet money on abracadabra.money, you need to have UST to deposit that and deposit backwards. And like I mentioned with the degen box strategy, many people are leveraging those positions, essentially increasing the risk that they're taking on, and these positions are liquidated much, much faster when the market experiences periods of volatility like this. So it's not necessarily the worst thing that is happening right now, it's not necessarily the best thing, but I do think we will see some recovery in the coming days of this. Now let's talk about what's going on with Biden. The Biden administration is to regulate Bitcoin as a matter of national security, a report says. The Biden administration will release an executive order in the coming weeks to task federal agencies with assessing the risks and opportunities that Bitcoin and cryptocurrencies pose. This is designed to look holistically at digital assets and develop a set of policies that give coherency to what the government is trying to do in the space. A person familiar with the White House plan told Barron's, because digital assets don't stay in one country, it's necessary to work with other countries on synchronization. Now, this of course does cause some concern in the market. We have to be very definitive with what we call fear and greed, right? Fear isn't necessarily the major side of the market that causes downside. It's more so uncertainty. So when people are uncertain, they don't know what to do, they take risk off the table, and that is what causes a downtrend in the market or a turn in sentiment, not necessarily fear. So if something bad is happening, for example, China banning Bitcoin or Kazakhstan banning Bitcoin mining, whatever it might be like that, that is essentially fear. And that does cause a minor downturn in the market. However, when there's uncertainty and people are uncertain whether the market is about to go up, whether it's going to go down, whether the proposals will be favorable or negative towards crypto, that is what causes major downturn in the market, because people don't actually know what is going on. If we talk about why people are scared of aliens, it's not because they don't exist or they do exist, but it's because we're unsure if they do. So it's that uncertainty that causes the most fear in the market. That's why we have FUD, fear, uncertainty, and doubt. So while this is happening right now, I think that it could be favorable in the long term. Once we have better regulation, sort of better frameworks around the regulation around crypto, we're likely to see higher upside in the future. As I've said many, many times on this channel, of course, over-regulation would be a very bad thing for crypto in the long term, and everyone sort of agrees on that. Regulation is necessary because it does allow even additional institutional investors into the space, people who do have large amounts of capital and want to invest in crypto and want to allocate some of that capital to these sort of what we would call risk-on assets at this point. They can't do that because they are unsure of what the regulation might turn out to be in the future. And once we have sort of a certainty on that and a clear regulatory framework and structure, these institutions and these large capital holders are able to better allocate that capital in a way that they aren't taking on too much additional risk by simply investing in an asset like crypto. So while I do think this might cause some sort of uncertainty in the market in the short term, in the long term, I'm very bullish on regulation for crypto because I do think it's very important for the mass adoption of crypto and sort of institutional investment around crypto and cryptocurrency assets. But let's talk about then how does that turn towards mass adoption, how this could potentially be a negative side effect by having mass adoption of cryptocurrency. So Goldman Sachs says adoption is a double-edged sword. While it can raise valuations, it can also raise correlations with other financial market variables, reducing the diversification benefit of holding the asset class. So essentially what it's saying is that as Bitcoin becomes, or crypto becomes, more of a macro asset class, it has more of a direct correlation to traditional stocks and equities and traditional markets. And that is true to some extent. However, we do of course have an entirely different monetary model, which is Bitcoin, a deflationary or sort of stable fixed supply asset versus an inflationary currency like the US dollar or many other currencies around the world. So while there might be this sort of intermittent period where there's a higher correlation between these sort of risk on assets and crypto assets with the traditional financial world, I do believe over time we will trend away from that and we will have a decoupling of crypto assets from the traditional world, since they are deflationary and fixed supply assets. While the traditional world and US dollar will always be inflationary and rates will continue to rise, there's sort of a negative air around traditional fiat currency. And we will see eventually, in my opinion, that solid decoupling away from traditional assets, even though they do believe that it could be a double-edged sword here and we have more correlation to traditional assets. However, I think perhaps when Bitcoin and crypto start taking more of that market share away and potentially becomes the major or the largest asset class, then that could lead the market rather than the other way around and having some correlation that way instead. Now, I just want to talk about, again, the projects that I mentioned earlier. Hype Bears, which is one of the major projects that we've partnered with and offered some whitelist spots to our holders. They, of course, have, I think, 250,000 in their Discord completely full. You couldn't even get in. We managed to squeeze some whitelist spots for our holders, meaning that you're able to mint one of these bears before public does and potentially have a good selling opportunity there, a good return on investment. We've got the Monster Ape Club as well, one of these three amazing for now 3D designed mutant apes. So if you do want allocation to any of these projects and future projects that we do have as well, we will have multiple of these whitelist opportunities to participate in. Monster Ape Club is, of course, the 3D designers from them have worked on Blizzard and a few major industries. So we do have good projects that we're trying to bring to our users as well. Now let's talk about Bitcoin bull or bear market. Are people panic selling out of their positions? So on-chain selling loss is now consistent, meaning people are selling for a loss on-chain. So this could essentially be institutional investors or retail investors looking to liquidate some of their positions because either they are taking on too much risk and they're worried that we continue going lower, or because they know that we're going lower and they want to then re-enter those positions at a lower price. So the spend output profit ratio, or SOPR, had a consistent patch of on-chain loss selling recently, he summarized to his Twitter followers. So essentially, Renato Shirakashi, the psychology of selling at a loss means that only those in a panic mode are likely to do so, and by extension, the shallower selling this month could be cause for a relief. And as I showed you earlier in the video, the Crypto Fear and Greed Index, we have been in fear and extreme fear for an extended period of time. Now, I've said a few times that during these periods of extreme fear are usually the best buying opportunities that we have, but it doesn't mean that we can't remain in these periods for an extended period of time. Now you can see over the past month, we've been essentially within extreme fear. Over the past 3 months, you can see that we've been in fear. However, over the past year, this has been one of the longest periods that we've been in extreme fear since that May crash that we had back in 2021. And after that, of course, we had the major recovery back up to $65,000 before then eventually coming back down, entering extreme fear again, providing another perfect buying opportunity for the new high up to $69,000. So when the market is panic selling, even institutional investors and big players are looking to exit their positions, even slightly at a loss, to enter even lower because they see the future coming back. If you do want a more passive, easygoing strategy, the easiest, of course, is always dollar cost averaging and buying in over time to eventually increase your bag and profit many years down the line. Extend your time horizon, have a better outlook for the future of crypto, and you'll come out of the other end alive. I hope you guys liked that video. If you found any of the information useful, please give it a thumbs up. And if you made it all the way to the end of the video, please comment down below, yellow key. As always, I shall see you in the next video. Cheers.